We've got to ask you about ARB Holdings, your company, and the one that went up 7% today. Ian Moyer's company went down 3% today, so you're in the right place. Good numbers, 35% headline earnings.
Yeah, absolutely. Thanks, Alec. We're certainly happy with the numbers.
Well, what would make you unhappy?
There's always a little bit to work on, but certainly the numbers were good. You know, the market out there is tough, no secret about that. So for both our divisions to be firing on both cylinders, you know, double-digit top-line growth, costs well controlled, bottom-line growth, and cash generation still strong, certainly very happy.
And it's a long-term process that you don't just get to 35% headline earnings improvement in a 6-month period, just out of the blue. Yeah. There's a lot that goes into it. And in your case, I've been following your company for a few years. There's been a lot of work behind the scenes, and it seems to all be coming together.
We certainly believe so. As you say, you know, it's a 5-day game. It's not a 1-day game or a T20. That's certainly our view. We've been working hard at making sure we get the operational efficiencies right. You know, when we make acquisitions, we make sure we understand why we're making those acquisitions. We make them on terms and at prices that make sense to us, that are attractive to us. And I think it's about maintaining that discipline that sees you through the tough periods that we're seeing now in terms of the market environment. And you know, certainly this last period bore fruit.
You say improving operational efficiencies. What exactly does that mean? Cutting costs, getting one person to do more work?
Yeah, it's not so much about cutting costs as much as what it's about. In a trading and distribution business, you know, you've typically got a very high proportion of fixed cost. You know, people is by far our biggest cost, so salary bill, rent, you know, the physical space that we occupy. And it's about making sure that those costs are difficult to flex. You know, you own a property or you rent a property, and you've got to pay the rent regardless of what the market does. So it's really about making sure that you're driving the volumes in the top line of the business. And as you drive the top line of the business, because your costs are largely fixed, you see an amplified effect on the bottom line. So some of the efficiency we've done, obviously when we take on acquisitions, what we do is we look to get the efficiency. So there may be some cost savings, and certainly we've seen that in the acquisitions that we've done, because there are a lot of duplicated costs in a standalone business that we've already got in our business that we don't need to duplicate or replicate. So we take those costs out, but it's really about the efficiencies across our branch network. So on the electrical side, we've got 18 branches. It's about making sure that we operate a very highly centralized back office model. So HR, IT, insurance, finance. You know, we don't have that representing all our branches. We keep that centralized at the core. And it's really those efficiencies that help us generate those results. That's really the efficiency, not so much about cost cutting.
But it's an interesting business in that you had an entrepreneur who founded it, who built it up for a period of time. Is he still the controlling shareholder?
Alan's still the controlling shareholder. He's our non-executive chairman and holds just on 50% of the
And is his spirit in the business? Because often when you corporatize and you do acquisitions like you've done, you can lose that.
Yeah. I think that's one of the challenges of any entrepreneurial business that goes public. And I heard Brendan speaking about it in Italtal. We've certainly have retained the entrepreneurial ethos in the business. And the entrepreneurial ethos is not about taking risk, it's more about taking ownership and feeling a sense of ownership of the business, making sure that when decisions need to be made, you know, they get made quickly. There isn't too much bureaucracy. At the same time, you know, being a public company, you know, there's a certain amount of governance and process and protocol that tends to fall on my shoulders, and you know, we try to keep our operational management quite shielded from that. But absolutely, yeah, that entrepreneurial ethos and spirit, I think, is what allows us to find the opportunities in the market perhaps quicker than what perhaps a larger, more corporatized business would.
You mentioned, Brandon, we've seen in the last few months, the rand taking an awful hiding. You do import a lot, so I guess the rand is important to you. They got lucky, he says, with improving their stock by about 500 million. Your working capital investment went up. Was that also a little bit of a punt on the rand, perhaps?
Like Brandon, I'd like to say that we had great foresight and knew the rand was going to fall out of bed. It wasn't. I think the investment in our working capital and our stock in particular was partly to fund the growth that we've seen. You know, we always say in trading, you can't sell what you don't carry in stock. And secondly, in anticipation of some of the projects and the rollouts that we've got on both the electrical and the lighting side. So that was the one side. In terms of the rand and the impact on the business, because that's something that we've been asked a lot. On the electrical side, 95% of the product that we source is actually sourced locally. So although there's an indirect impact that ultimately is all manufactured in the East or Europe or wherever the case may be, it's not as pronounced as what it is. We tend to buy in rands and sell in rands. On the lighting side, the exact opposite. You know, that business imports 95% of its product. but is shielded in the sense that there is no local manufacture or locally manufactured product available. So all our competitors, as well as our customers, are in exactly the same space in the sense that all the product has to get imported. When the currency moves out, we have to pass those increased costs onto our customers, being the retailers. And sadly, from a consumer perspective, it obviously filters through to the consumer in the form of increased prices.
So if you want new lights, like these beautiful lights that we have here, you just know it's going to cost you more. Whereas on the electrical side, how much of that product, you did say you're buying in rands, but the people you're buying from, how much of that product would be imported?
I think the bulk of it. Certainly if you look at something like cable, which makes up approximately 50% of the electrical division's revenue, we're well represented locally in terms of cable manufacturers. So that product is sourced locally. Of course, the copper, the aluminium that goes into that cable is bought in dollars on the LME. So there's indirect price influences, but it's not as direct as on the lighting, where we're paying hard currency to bring the product in directly.
Coming back to lighting, is renewable energy and the developments in that space an opportunity for your business?
It certainly is. On the lighting side, obviously the migration to LED lighting is certainly starting to gather some momentum. The price points from the consumer are still fairly high, and the rand isn't doing us any favors, but we supply the full basket, from old incandescent lamps, which are in the process of being phased out, through to compact fluorescence and ultimately to LEDs. So that's fine. On the electrical side is where renewable energy is perhaps a little bit more interesting for us. And I've always said our business isn't about how the power gets generated. As long as power is being generated, it needs to get transmitted, it needs to get distributed, it needs to find its way from, whether it's a solar farm, a wind farm, a coal-fired power station, Medupi, it still has to find its way into your studio, into your house, into your factory. It's how it gets transported that's really our game. So as long as electricity is continuing to be generated, we'll benefit from an increase in the grid.
Just a quick one, Byron. What is the payback time on switching from a cheap old light in terms of electricity to an LED, which is more expensive to buy upfront?
Yeah, it varies. It varies across the actual product. It varies across domestic, commercial, industrial, and then you get really top-end premium stuff. But those payback periods are coming down quite significantly. So on a domestic downlighted typical LED, you're probably looking at less than 2 years. As you go to some of the more sophisticated, it would be longer, but they're obviously coming down very quickly, as on the one hand you've got the cost of electricity increasing significantly, and on the other hand, as the technological curve and advancement happens and the volumes of LEDs pick up, as we've seen with many other products, the price points start coming down. So those periods are getting shorter. I don't think they're quite at the point from a consumer where we've bridged the gap where everyone's rushing out to go.
It's still a good investment.
But
if
it
you
is
can get your money back in 2 years and
Absolutely.
cheaper electricity, it's a 50% return.
Absolutely.
Quite a good one. My producer's going to kill me for this one, but your expectations for the budget speech later on this month?
Very hard to say. I think I'd rather be talking about ARB's results than the national budget. So I don't envy Pravin Gordhan, but I think we've got to see continued cutting in public sector spend. It's going to be very interesting to see the Minister and Treasury's outlook in terms of inflation and what the rand's doing, and we've started seeing the monetary policy in terms of interest rate increases. I think it's going to be a very difficult budget to drive the balance between making sure that we maintain some semblance of economic growth on the one hand, and on the other hand, reining in fiscal deficits. And all of that in an election year.
You're talking like an economist.
Yeah, and all of that in an election year.
economist to tell us that. We want something from your business side. Byron, as a businessman,
from our side, all that we want to see is we want to see the NDP being implemented and see infrastructure spend being activated. That certainly will benefit both lighting and electrical. So we look forward to infrastructure spend.
That's the soundbite you wanted.
Exactly.
Thank you.
NDP on our radar. Thank you so much. That was the Chief Executive of ARB Holdings, Byron Nichles.